So we're talking.
Okay, it looks like we are live and Rachel's in the house. She literally just got in the house. Did you have any trouble getting through security? I mean,
No, I jetted on
they
through.
know you by now, so you got on through the perimeter fine. And she's here, and we're going to talk real estate. You want to talk a little bit about
I
Bitcoin,
think we should.
and we're going to talk a little bit about watches because they always want to talk about watches. And I'm also going to connect that to investing in Bitcoin and real estate and all of that because people are looking at where can I put my money now?
Correct.
Right. And so that's a whole thing because I think everybody has pretty much acknowledged that the US dollar is being debased, that they're printing it like crazy. And so this is why everything in the grocery store is more expensive. This is why anything that people really want is significantly more expensive. Things like big screen TVs have gotten cheaper because of technology, but that's not the hard to get things, the what I call hard assets, an acre in Manhattan, right, is still pretty expensive, even though a lot of people are leaving New York. Probably not a good, let me say, acre in Miami, let's say.
Yeah.
Prime real estate. That is still valuable and pretty much probably will always be valuable. But there are other things that not so much. So I actually had a debate with a guy on Facebook today, and I'm going to show it. And he was talking about a watch in 1958 that was $150, and making the point that they're so much more expensive now. And I basically made the point, well, that's because the dollar is worth a lot less now. The dollar is buying a lot less. And so we're going to talk about all of this, but let's catch up on your real estate because it's been a while. You want to get a little closer to that mic?
It's been a while. Hello, everybody. Yeah. I don't know if we're seeing comments or anything. So you'll have to give me a whole spiel.
Yeah, we will. We got somebody asking about a faux pay check. This is my faux pay. I don't think you have a faux pay on.
I think we
right
talked
now.
about that at one point.
And Kyle Jett is in the house. He's saying, okay, he's from the West Coast. So we got a West Coast folks. And he says, welcome back. Happy 2024. Okay, so let's catch up. What have you been doing?
I've been going crazy. We had the investor bug as well. And we obviously are more into real estate. We sold our big house we built.
Beautiful. That was a beautiful, yes, beautiful.
And bought 4 other properties. So that's what we do. So husband's builder contractor. So that's our skill set. Bought land in Smithsburg to build a new house because I have a million kids. And then we really put our sights on Frederick. Again, everything between watches and houses and crypto is supply and demand, even bubble gum. So where's the demand coming from? It's kind of what we studied. And where's it going to go? And so we bought a bunch of real estate. Some will sell and just keep doing it. So that's what we've been doing.
And sometimes you improve the real estate, like you built
all
the
of
house,
them will do.
Right?
Yeah,
you bought that lot that had a beautiful view, and then you built a beautiful place to take advantage of that view.
The Blue Ridge Mountains. Yeah, I had to see them, and in fact, I ended up buying the neighbor's house. The 1946.
Okay.
That was one of the investment properties that we picked up.
Okay.
Not the best idea, but that was an emotional purchase. Again, a lot of things are. The Blue Ridge Mountains. And then being in the zip code of 21771, and I have $1 million house behind it. So it kind of, So then you fix it up and sell it for more.
So Craig's property here in Maryland might be on the market, and Rachel might be helping with that. So yes, so this is an undisclosed location. We don't like to publicize the location where we are for security reasons. But what do you think? Would you be able to move this property?
Oh yeah.
Yeah. So there you go. No hesitation on Rachel's part there. So okay. So you're buying these land lots that you're then going to build beautiful houses on, like you did before?
We'll do the one and probably hold that, and then again just focusing on the city center as it's growing, being outside of DC. I'm allowed to say that though. You guys know where I am. Obviously I'm outside of DC.
You're not really hidden.
I was gonna say you can kind of see everything. So being in that trifecta, Frederick,
we'll
is
show
at
your
tip.
website real quick. There you go. That's how you can find
Baltimore,
Rachel.
and then Montgomery County is a DC suburb. So I do DC, Baltimore, and then at the tip is Frederick. So you kind of think in that triangle of, and what's happening beyond, where the people coming in from, what's the demand, the turnover rate. Now, obviously, we're, I don't want to say recession proof, but some of the economists that I've had on my show.
Well, the way the
have
Feds
said
have been
that
growing and government's been growing, we kind of are.
I won't go down that,
Can
but
you say spending money like drunken sailors?
Yeah.
That would be an insult to the sailors, so we won't do that. Craig, would you accept Bitcoin as payment for your house? Heck yes, I
so
would.
that's something else that I would love. I actually mentioned it to my broker a little bit there. Being Remax, I don't think they're going to be quite into that, but being commissions on Bitcoin, I would do it.
Well, heck yeah. Okay, so let's talk a little bit about Bitcoin real quick to kind of get this out of the way. So there was the Bitcoin ETF, and this has been anticipated for a long time. And then literally it's been 10 years, Bitcoin ETFs, people have been trying to get a Bitcoin ETF. In other words, a wrapper around Bitcoin in the ETF format. And we have an expert that just came in ETFs. This is the perfect timing. I'm going to bring up British Hoddle. I'm going to bring him right on up here because we don't have him for very long. British, can you hear us?
I can. Can you hear me?
Yes, let me turn up the volume a little bit so Rachel can hear you. So we just started. Man, your timing.
Nice to meet you, Rachel.
Nice to meet you as well.
Your timing is amazing. We just brought up the ETF subject. Rachel's in real estate. She's invested in real estate over the years. Her husband is a fantastic builder. They're able to buy a property, like for example, with a beautiful mountain view, and then build a house on it and then make a nice lick when they sell it. So they've been doing that. Rachel has also bought some Bitcoin, and I orange pilled her a while back. I don't know if I've got her completely orange pilled yet, but we're working on her.
We're working on it.
So talk about the ETF, explain to Rachel what's going on, and a little bit about why the price has been kind of going sideways. All the GBTC that's been dumping. Just give her the backstory on the ETF real quick, and then touch on that, if you will. British Hoddle.
Yeah, so the ETF is the single most important event for Bitcoin's life story since the inception of Bitcoin. It is every asset goes through a securitization process. Real estate really became an asset class of its own that could attract now $330 trillion worth of worldwide value once it went through its securitization process, once you could get a mortgage on it, once you could, write debt against it, et cetera, et cetera. Now Bitcoin's going through that process in a very, very amazing way, right? With an ETF product is great, especially with the best capital markets in the world, which is the USA. So, that's what's happened to Bitcoin right now. The reason why the price is going down is because the way institutions buy versus the way retail sells is different, right? Smart money is definitely going to buy and sell differently to retail money. And so what we've seen is that a lot of people who either were forced or emotional, waiting to sell once the product turned from GBTC, which was a trust before, into an ETF, have basically gone out and dumped a lot of Bitcoin onto the market. And so you've had a drastic increase in supply all of a sudden. But on the buying side, the smart money algorithms are doing what they do, which is waiting for all of that supply to get eaten up slowly before they actually start allocating the capital that they wanted to allocate. Because if I'm smart money and I see a bunch of sell orders on the books, I'm going to let all those sell orders hit the market, and I'm going to let the price drive down. And then once I see that those sell orders are getting bought up, that's when I'm going to start buying into the market. So that's what's going on right now. There's a rotation of buyers. There was also a bunch of entities that were forced to sell into the market on conversion, like FTX that had $1 billion of Bitcoin ready to sell. You got miners that wanted to generate liquidity on their positions. You had people who bought GBTC 5 years ago that was sitting on a position that needed some liquidity. Yeah, so you've had a sudden sharp increase in supply, while the algorithmic buying that happens has stayed consistent, right? So the price has effectively come down. Now, what's unique about this situation is before the ETF was approved, there was about $30-40 million a day worth of purchasing to keep the price stable. Today, even today, while the price is where it's at, there's about $100 million a day worth of purchasing going on. So we've had a threefold increase in daily, consistent, passive flow of buying going on, while this is now a securitized product, while BlackRock, Fidelity, and all these other guys can now get into it, right? So people keep telling me, oh my God, all these guys are allocating. I don't even think BlackRock's even started allocating yet. Right, like I can't even imagine a world where they have.
It's like they're getting in position.
Right.
Everyone, the big power players are getting in position.
And they don't move that fast. Just because all these ETFs are out there doesn't mean that everybody out there, every financial advisor is pitching it to their customers and all. It takes some time.
It does. The emotional wear.
And the problem with crypto Twitter and all these guys is that they all have such a short time horizon, right? They're not, and to me, it's astounding to me, British, that the price is held up as well as it has, considering all the GPTC selling. I projected that they were going to sell about 20%. I thought they were going to lose about 20% of their assets under management. They've already lost, from what I understand, 4 billion. 20% would be 6.4 billion.
Yeah,
okay,
it's about 15% is already done.
So if we get to 20%, that'll be 6.4 billion. Do you think it's going to be more than 20% bleed on GBTC?
I always lean on what my friend James at Bloomberg says, which is, they've got the best analysts in the world as far as I'm concerned with this whole situation. And he said somewhere between 20 and 35%. Now, I think that as it goes past 20%, you're going to see some selling exhaustion happen. And at that point, if I'm Grayscale, right, I've stepped this thing out. Like, I know there's going to be people that need to sell immediately. So I'm going to keep my fee at 1.5% while everyone else is at 20 basis points. And then as that liquidity drains out of my fund, I'm going to now start lowering the fee to incentivize more people to stay in position. So once it gets to 20%, I go, okay, let's lower the fee down to 1%. Still 5 times higher.
Or British, if they feel like the bleeding's going to stop at around 20 or 25%, why would they ever lower the fee?
Well,
if they've got a certain number of customers that just are going to leave it in there no matter what, because they don't want to take the capital gains hit, or they're just unaware. If you look at the performance of Bitcoin, even their current fee is cheap, right? If I'm going to make 20 or 30% a year on my GBTC, why do I care about the 1.5% fee?
Well,
so you can look at this a couple of different ways, don't you think?
Yeah. In addition to that, what's quite attractive, and I sent a tweet out yesterday and I said, I think within 3 weeks, this bleed is going to slow down. And even we may see a day where we start seeing a net inflow into GBTC. Now you might go, why would that happen if the fee is 5 times higher than BlackRock? Well, you got to think about it. The NYSE has just filed to allow options trading on the funds. And options trading is what's important for options trading is liquidity and volume. And if you've got the biggest fund, you're going to have the most liquidity and the most volume. So at some point within the next 3 months, Bitcoin now turns into a cash flow generation asset because institutions can now use options and write covered calls on the position. So from that perspective, GBTC, I think, is going to be a top 3 player. Even if they go down from 630,000 Bitcoin down to 450,000 Bitcoin, I still think it's going to be a behemoth in the space. And there will be some people that say, hey, a 1.5% fee, but I can generate a 2% a month, covered call income on my position. I don't care.
And look at the amount of appreciation they're getting anyway on Bitcoin, especially with the halving coming. Okay, I know I can't keep you much longer. Let's address Rachel directly as far as the real estate. She's got a lot of money invested in real estate. I think she should start rotating more and more of that into Bitcoin, but then again, that's me. What do you think? What would you tell Rachel about the potential returns, let's say 10 years, let's say a 10-year time frame, the potential return on 1 Bitcoin versus the same amount of real estate?
Well, here's the thing. I mean, are most of your real estate positions on 30-year fixed rates?
No.
So, I have a real estate background and my parents are in real estate, right? And what I did with my parents was, as I transitioned to Bitcoin, I leveraged their property portfolio to basically buy more Bitcoin. I don't think anyone, trying to tell someone who's been doing, you look much younger than my parents, but my parents have been in real estate for 35 years, right? Trying to tell them they need to dump their real estate to go into Bitcoin, that wasn't going to make sense. So, I don't even have that conversation anymore. Everyone loves their real estate, and that's absolutely fine. Stay in the real estate, but just figure out how to utilize that real estate
Maybe
to
to
start
merge or
buying more
marry at some
Bitcoin.
point.
Yeah. So, like, for
Well,
example,
leverage it,
Well,
with
like
with
the
borrow
example
against it.
of commissions in Bitcoin, or what if a seller wanted to sell their house and they would take Bitcoin? I believe there's some instances on the West Coast from that.
Yeah.
And then you've got an asset that's appreciating as the house.
Well, yeah,
and
if you can
Bitcoin.
earn Bitcoin, that's
there's
always
two
great. If you
things
can
to
get
play
your
with.
commission paid to you in
you could
Bitcoin.
just say, I mean, it depends on, what your free cash flow is, but you could say that 30% of all your rents are going to go into Bitcoin on a monthly basis. My parents refied their portfolio and bought 1 Bitcoin for every property that they owned. And just to put that into perspective at the growth rates that are going on, they spent 35 years building this portfolio. Their average cost of acquisition on Bitcoin is $10,000. As soon as Bitcoin goes to past $100,000, they've doubled the value of their real estate portfolio that took 35 years to build in the space of 4 years, right? And the most important part about it is it's liquid, right? And as you know,
That's huge that Bitcoin is as liquid as it is.
It's liquid. And as you guys know, as investors, liquid assets to me are worth 10 times more than illiquid.
You can push a button and have access to it. I get to list a house, get a buyer, takes 30 days to close escrow.
Or get a loan against it, which takes time.
Certain things like that.
And by the way, Rachel, like all of the creative financing stuff that you guys are used to doing with real estate, that I was doing with real estate, is now coming to Bitcoin. Right? Because as soon as it's an ETF, you can now start lending against it. BlackRock can underwrite the position and lend you against your Bitcoin holding, just like as if it was an SPY S&P 500 index fund position. So all of these rails are now being adapted to Bitcoin. And that's why I've always said, I think that the Bitcoin ETF is going to be the preferred way for most investors to invest in Bitcoin over the next 15 years. Because you've got the cash flow element from coming in from the option side. You've got the lending element, because I can just basically plug it into the existing rails and start borrowing money at basically Fed plus 50 basis points.
Yeah.
And so you can start basically leveraging this asset and start turning it into what it's meant to be, which is a democratized product that anyone can access. And if I want to generate some liquidity, if I own 4 houses, right, and let's say the average house is $350,000 a house, if I've got a $50,000 expense, I now need to rid the $350,000 asset. Whereas with Bitcoin, I don't need to do that. Right, I can just sell $50,000 of Bitcoin and
phenomenal.
Right,
it's going to be interesting.
So British, I'm going to show your. Let me show your YouTube channel, folks. You've got to subscribe to this gentleman, and let me make that. Let me make us full screen here. Solo layout. There we go. So that's British's YouTube channel, British Hodl, and this guy puts out videos almost every day, if not every day. And he's been right on it. I mean, he's relatively new to Bitcoin. You've been in what, 2 or 3 years now?
Yeah, I mean, my background's in real estate to start with, and then equities, and then gold. And I thought Bitcoin was a scam all the way up until 2020. But
2020.
Who does that remind you of?
Yeah. Well, that reminds me of a lot of people. The first touch, that's the impression. For me, the first touch was not that it was a scam, but that the government was going to shut it down. That was my fear. I said, there's no way they're going to let this thing survive. And when I finally realized that they can't stop it, that's when I started getting serious about Bitcoin. Thank you so much for popping in, British Hodl.
Yeah, thank you so
and
much.
We'll show your YouTube again before we wrap up, and I'll put a link in the show notes. Thanks for popping in. Any final words for Rachel?
No, listen, thanks for having me, Craig, and thanks for inviting me. And Rachel, I wish you the best of luck on your journey.
Thank you,
of course,
well.
Listen, real estate is a great asset, but to me, every generation has its asset, right?
That's a great point.
And we're at the point now where the generation is transitioning. About $60 trillion is going to move in the next 25 years down to a new generation. That new generation is not investing in gold, so that's done to start with, right? And then real estate, they prefer a more nomadic lifestyle. So they might use real estate as a cash flow generation asset, but they haven't even realized that it's possible to use Bitcoin as a cash flow generation asset. In fact, to know that this is going to be big, the first thing that Grayscale did as soon as they got approved was file for a covered call fund with their product. The very first action they took was filing for a covered call income fund on their Bitcoin position. So yeah, the world is changing. It's going to get a bit uncomfortable. But I think real estate is played out. I don't think if you just take the compound annual growth rate for the real estate that you've got for the last 30 years, right? Just you can find those numbers and try and project that out for the next 30 years and tell me how realistic that is. It doesn't make sense to me. I think real estate is basically the juice has been squeezed out of it. And I think that the world's investment and debt systems need a new asset to pump fiat into, and the best one to do that with is Bitcoin, because again, you can't just have property prices go up in value, because the peasants will revolt at some point, right? The people need houses to live in. So real estate is that asset that you can push a little bit. Bitcoin's the asset that can go all the way. So I think that's what it turns into at some point. But
Thank you. I appreciate that.
Thanks, British, for popping in.
Thank you, Craig. I'll speak to you guys soon. Bye-bye.
Take care. Take care. So here's the thing. I mean, and he touched on this, but with these ETFs, what's happening now is anybody with a brokerage account, anybody with an IRA, Roth IRA, regular IRA, inherited IRA, whatever, they can all now very easily buy exposure to Bitcoin through a name that they trust. This was previously not really available. All they had was GBTC, and it was a trust. You weren't really owning it didn't work the same way, and the fees were very high. And so no investment advisors advised people to buy it. Okay. Now you've got all these professionals that work for BlackRock and so on and so forth that are calling their folks up and saying, hey, put 1% in this thing, right? And so, and what's neat about Bitcoin is these big investors, if they just put a small amount in Bitcoin, it can change their whole reward profile.
But it's an emotional signal to consumers.
And what happens is Bitcoin, BlackRock will start all of a sudden outperforming their competitors, right? Because now they're getting their people to put a small percentage in Bitcoin. Now all of a sudden we're coming into the halving in April. The price will probably double, this year again. It doubled last year. It'll double again this year. So that's going to make all those portfolios outperform, right? So then those folks will say, well, what is this Bitcoin thing, right? And then they'll start looking into it. And then some of them might start buying it just to self-custody, right?
Well, once you see the big players, the banks start to play with it. And now.
And all the while, it is simply a 21 million hard cap. Okay. And this is what a lot of people can't seem to wrap their head around is 21 million for a worldwide market now. Okay. 8 billion people is nothing. That is nothing. That's no supply. Okay. And if you see all this new demand coming in, and this is new demand, mark my words, the money that's going to come in from these ETFs over the next 10 years, most of it is going to be brand new money to Bitcoin. Brand new money. Okay. And we're still sitting at a 21 million fixed cap.
And that's it.
All right. It can't be changed. Let's go back to the comments real quick here. Craig, is BTC or Rolex the more sure bet? We're going to talk about that. Lost Spring Bar's in the house. And blink 3 times if you need help. Do you need help, Rachel?
Trust me, I'm a chatty Cathy myself.
Blink 3 times if you need help. Okay, so we should do a regular show. Yeah, I've already had security close the gates and all. She's not going to be able to get out of here. Okay, this isn't one. You come in, you can't go out. That's how this whole thing works. We should do a regular show every Wednesday. We'll see about that. Okay, I got to show this thread of this guy.
Okay.
Because
the Facebook guy, right?
Because this is today. Okay, this is today, and you just I had to show this because we were going to talk about this, and then this just happened to happen today. So this guy posted this thing about these frogmen in 1958 wearing Rolex Submariners that were about $150 then. Okay, and there's the watches. It's a cool photo. I love photos like this. So 1958, I'll dox myself. That's the year I was born. So we're going to go down here and we're going to look at all of this. Okay. And I commented, I said, that was a lot of money back then. And then Matt, he says, it was about 1,600 in today's money. So yes, a very significant amount for a watch. Okay, so I'm going down here. View previous replies. I got to get all of this. I want all of this, guys. Why are you truncating?
You guys were duking it out.
This is not playing nice for me. Okay, I say, in other words, the index he used is the CPI index for the amount of. Seymour, I hate this. Come on, guys. The amount of inflation. Okay, so he's using what the government's numbers to determine that $1,600, right?
Okay.
And I'm replying, I said, I don't agree with that index. The government has been underestimating inflation for many years. Their numbers are way off. You need to use hard assets as a benchmark, like real estate or nowadays Bitcoin. The government has changed the, quote, basket of goods from time to time to make the numbers look good. The value of the watches has not gone up. The dollar has gone down, way down. And then he responded. He says, oh, dear. I'll step out of this one. Of course, he didn't. Obviously, the basket of goods changes. We're not buying the same stuff we were in the 50s. All that matters is the year-on-year change. Hard assets, Bitcoin, and laughing face, right? 1958 to 1924 index, laughing face. Okay, so here's the thing. I'm going to attack each one of these things because this is what pisses me off. This guy thinks he's smart, and he's making absolutely stupid comments. The basket of goods changes because we buy different things. No, if we buy a T-bone steak in 1958, we can buy a T-bone steak today. If they substitute the T-bone steak with hamburger meat, that's not apples to apples. It's not steaks to steaks. Okay. And this is what the government does. This is a perfect example. They've taken actual steak and substitute it for things like hamburger meat or even fake meat. Okay, in these basket of goods in order to keep the numbers where they want them. So it's actually fraud, if you ask me. So let's go on. And I said, Matt, sorry, but it's all math. Your numbers are way off. You can pick the hard asset of your choice. The reason I mentioned Bitcoin is it's the hardest asset ever known to man. In other words, it can't be debased. But you can pick something else, maybe like Miami real estate. Why they have to see more. Or a building in Manhattan. Just pick a benchmark that really represents value, then run the numbers. I think you'll be surprised. I'm trying to be helpful here, actually. I'm not really trying to argue with the guy.
I thought it was a nice comment.
Okay, so here's the thing, Rachel. If you're building a house and your carpenter has a measuring tape, and he's using this measuring tape to build the house, is it helpful if from time to time you extend the measuring tape? You make, instead of a foot having 12 inches, you make it have 14 inches? Is that helpful to the guy building the house? I think it's going to kind of skew things.
Yeah, a little
right?
extra.
I mean, I think you need to have the measuring tape consistent, right? Or otherwise, the house is going to be every which way.
Correct.
That's why our finances are every which way right now in this country, is because they've been changing the measuring tape. Okay.
That's a great.
So let me go on. Wait, did I read this part? Yeah. Okay. Quoting Bitcoin as a hard asset is not helping your credibility. See, he doesn't know anything about Bitcoin. He doesn't realize that it's absolutely hard. It cannot be changed. Okay. Which is the definition of hard money, is it can't be debased. Matt, okay. I said, I just explained to you the index that the government supplies is not accurate. Okay. I think I just read that, right? No, okay.
I'm reading this one.
Okay.
This is
The reason I point this out is so many folks are delusional about the value of watches. Watch is a consumable luxury item. A lot of folks are going to get burned thinking otherwise, especially those who paid over list during all the hype. And we'll talk about this in a minute, because this is a very important point. Okay, your side. Now here he's bragging. He's got a degree in economics, and he's qualified and practicing finance professional. I understand a great deal. I shared no view on the value of the watch or the price and value of the watch today. I merely quoted the comparative value, blah, blah, blah. And that's what I challenged him on, is the comparative value is BS. That it's not a correct gauge. Okay, so anyway, I'm not going to read the rest of this. I have to address this 1,000-pound gorilla in the room when he talks about he says, the reason I point this out is so many folks are delusional about the watch value. This is my reply here. So when you talk about a 1958 Rolex Submariner, okay, that is a collectible item. That's a very early Rolex Submariner, of which not that many have probably survived in good condition because they were a tool watch. And so that watch in today's prices might be very valuable. It might be worth $250,000 as a collectible item because it's so rare. But the people that bought a Rolex Submariner 2 years ago and paid over list for it because of all the hype, if they think it's going to appreciate as much as that 1958 Rolex did in 66 years, I think they're going to have a rude awakening coming, because they're not going to have one of the first Rolex Submariners made. They're not going to have something that is as collectible as that watch. So they will be very lucky if that watch keeps up with inflation, much less keeps up with a good investment like real estate or Bitcoin or something else. So my point in all of this going back and forth is, I've always said that watches should be bought to wear and enjoy. If you buy a whole bunch of steel Rolexes because everybody on Facebook is saying that they're hard to get and you're going to make a ton of money by buying them and sitting on them and all that, you're going to get screwed. Okay. And that's the problem. And that's what I'm trying to address. But anyway, I've gone on about this enough. We got to catch up on the comments here real quick, because I know I don't have you forever here either. So lengthy time ago, we read that. Regular saw on Wednesday. Take the damn background down. I want to see Rachel's beautiful face.
Is that my buddy? I think I had a buddy from a while ago. It's been so long. Oh,
so yeah, Grand Seiko is king, and everyone should sell their Rolexes for the almighty peacock. There you go. Craig, you're killing us with this background. When you have a supermodel on the stream, you showcase the. I was going to set up a close-up camera on Rachel, but I really
wait till spring.
I really didn't have the time today to do it, but we'll stay tuned. Next time we'll have a close-up camera for Rachel.
Those are so sweet.
Craig, I've heard Grand Seikos rarely need service. Is that true? Correct. I think they can go decades without being serviced. A spring drive, not the regular automatic movement. Dur is thirsty. Give him the hydration he needs. I got to drink something actually. Craig,
is Peacock a Mac Daddy of Grand Seiko?
I think that's just a symbol they use or something. I don't know why he's saying Peacock. Craig, we don't care about the coffee and watches thread you're reading. We want to see Princess Rachel.
Do you do coffee? Do you do coffee reviews or anything like that ever?
No. I don't drink coffee. That's just a group.
Okay.
In Facebook where they talk about watches. Rachel, we all miss your face. We need you to save this channel and to save us from the vicious file Grand Seikos and Bitcoins. Okay, so I want to know Craig's thoughts on Tudor. Oh my God. I think it's the best value brand in the world. Yeah. He's just trolling because he knows I hate Tudor. Tudor is a cheap Rolex.
Tell me what you. Okay.
It's a cheap Rolex. They're all ugly and they're garbage. Bree Fit Dance says hi everyone. Bree, you should pop in and say hi. I sent you the link. So okay. So what else? We talked about the Rolexes. Bitcoin.
Can we talk about Bitcoin for a second? I have some questions.
Okay, you had questions. Go.
So with Bitcoin now, it's being accepted, right?
Okay.
We've got the new news here. How do we feel that's going to translate into consumers responding and the time? When do you think every other Tom, Dick, Harry, and Joe is going to jump on the ball?
I know why you're so smart now. I've figured this out. Okay, you're just smart, naturally smart. Okay, so that is the question of the day, folks. Write that down. When will other folks wake up? That's my translation of her question. And this is the thing with Bitcoin is it is a knowledge arbitrage. Okay. It's between the people who know and the people who don't know. This is an arbitrage play. This is also what can be called an asymmetric opportunity, an asymmetric opportunity. And what that is defined as is if you look at the downside of the opportunity and then you look at the upside of the opportunity, the upside is significantly more than the downside. That's an asymmetric opportunity or an asymmetric bet. Okay, so right now, one Bitcoin is roughly $40,000. So the downside to buying one Bitcoin is $40,000. You can lose $40,000. The upside is many experts are saying by 2030, which is only 6 years from now, that Bitcoin will be between $1 and $1.6 million per Bitcoin. Okay, so this is people like Kathy Wood. Let me play a couple of video
Kathy,
clips.
I follow a lot.
Let me play a couple of clips here.
She seems to have
because I'm not making this stuff up. Okay,
no, but
so here we go. Here's Kathy.
Our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030. You can see the building blocks. You can see how conservative we are in terms of those building blocks. This is a big idea. It is the first global, decentralized, digital, rules-based, critical there, rules-based monetary system in history. It is a very big idea.
Okay, so now let me play somebody from BlackRock. Okay, because people sometimes on the channel, they think I'm making all this stuff up, right? I'm just pulling it out of my you-know-where. But no, I'm not making this up. Listen to this.
Well, first of all, thank you so much for having me. It's great to be here with both of you. I mean, I will say by every measure, this launch has gone incredibly well. We've really seen a groundswell of interest coming from many directions. When you look at volumes, when you look at flows, when you look at how the product itself is trading, the iShares Bitcoin Trust, what we like to refer to as IBIT, has traded more than $3.5 billion since its launch just a little over a week ago. We've brought in more than $1.6 billion in flows. We're the #1 issuer, new issuer, both in terms of volume as well as flows. When you look at the spreads, we're trading at a penny wide. This is exactly what you want to see. What we're here for is to provide investors access, and that's exactly what we're doing.
She's encouraging the emotion. And this is how every market
it's no joke when you have BlackRock
and when BlackRock's
saying that. Okay, now listen to this next clip.
Well, I'll say a few things here. First, we welcome the developments that we've seen on the regulatory front. But let's be clear. It's been investor demand, and it was investor demand that got Bitcoin ETFs over the line. It's really about providing access, and from a regulatory perspective, we welcome the developments that we've seen.
So what she said right there was she just tipped their hand a little bit. The investor demand. In other words, people were going to them and saying, we want Bitcoin exposure, and they weren't able to do it. They didn't do this because they like Bitcoin. They did it because the investors were coming to them and saying, we want Bitcoin exposure. Okay. And now what happened was Larry Fink called up Gensler at the SEC and said, listen, I know you've been delaying and postponing these ETFs for 10 years now. You've been turning them all down and so on and so forth. Guess what? BlackRock's going to do an ETF now. You're going to approve it. And Gary Gensler said, okay.
Now everybody shows up to the dance.
Now all of a sudden, 11 of them get approved because BlackRock, Larry Fink, who controls the government basically, called him up and said, this is how it's going to be. Okay. And what's bizarre to me is that people don't see this, that people still are dilly-dallying. They don't see it. To go back to your question, I think it's going to take 10 years before most people understand even half of the significance of Bitcoin.
And any digital asset too, I think.
Well, forget about all the rest. Forget about the altcoins, Ethereum, all that crap. That's all vaporware. That's not going anywhere. But as far as understanding Bitcoin, I think it's going to be 10 years, and maybe half of the people out there are going to have some understanding of Bitcoin. 10 years, just like half of the people out there have some understanding of an iPhone and how it works, right? The other half are just clueless. And so the ones that have Android phones, for example.
Hey, all my products are Apple except for my.
So
I get a lot of crap for that.
So oh, for crying out loud, this guy doesn't know I'm online. I mean,
Best
kill that.
ringtone.
Okay. Yeah. Okay. So, all right. So let's go through the rest of these comments. But yeah, so we're going to have a while. We're going to have a little while to still front run most of the people. But the window is closing. Okay. The window is closing because I think once GBTC exhausts on their selling, again, they're selling huge amounts of Bitcoin right now. And the reason, and British didn't really go into the specific reason why this is happening. The Bitcoin Trust was trading at a premium, if you will. And well, people were paying more for the Bitcoin than they should have been. Okay. And plus the fee was higher than ETFs. So there was a double whammy there where they were down, like before the ETF launched, they were down about 7% compared to if their money was actually in real Bitcoin. So they were operating at a 7% loss by having their money in that ETF. As soon as the ETF converted, that 7% closed, and now they were back to
dissipated. Correct.
Now they were back to even NAV. Okay, so all of a sudden, all these people who had GBTC for a long time and who were underwater to the tune of 7%, it had been as much as like 40% they were underwater. And then that gap kept closing as we got closer to the ETF. It was 7%, then it went to 0. Now all of a sudden they can get out and get all their money out and get all their profits out. Okay. And so a lot of people took that opportunity to say, okay, I'm going to cash out.
That was his recent sell-off.
I'm going to sell my GBTC, and some of them might have taken some of that money and put it into some of the other ETFs, but some of them might have just put a pool in their backyard. Okay, so that forced a lot selling.
Hopefully not. That's the.
I'm just saying. I'm just saying the fact that closed and they were able to get all their money out. Now, all of a sudden, they sold. Then the other thing that happened is FTX, that operation Sam Bankman-Fried that went belly up and all that. They sold $1 billion worth of the estate, the bankruptcy court or whatever. They sold $1 billion worth of GBTC that they owned, right? So they went to market and sold that. And so that was a lot of selling pressure the last several days. Okay. And GBTC is still bleeding and they're still selling. They sold a bunch more today. All right. So once all that, peters out, once they don't really have more Bitcoin to sell, now all of a sudden you're just going to have people just steady buying on all these other ETFs. Again, BlackRock's sales guy calling up and saying, hey, you should put 0.5% in this or 1% in this. Right. And so then in April, we've got the halving where the supply is going to go from 900 a day to 450 a day. New Bitcoins created, right? They're already buying significantly more Bitcoin than that every day. These ETFs, they're buying thousands of Bitcoin every day. Okay, so they're already buying more than the Bitcoins that are being created because
that's causing.
I mean, and the fact that the price is holding as steady as it is, even with all the GBT selling, should tell people you better get in before GBTC finishes selling.
That's that emotional. hey, look.
Okay, so let's go through here. BTC. Rachel's thoughts on real estate in Northern Virginia. Okay, so here's the thing. Again, we talked about how this whole area is kind of recession proof and they keep growing the federal government. But once that finishes, once all hell breaks loose and God knows what's going to happen, I don't know if I'd want to have a ton of money in Northern Virginia real estate. Plus, the taxes have gone way up. So you got to pay taxes on all this stuff. So unless you're doing like Rachel and you're buying a piece of property and improving it, and then selling it for a profit, that's a whole different ballgame than buying something and holding it.
So my thoughts, though, specifically, if you're holding an asset if you're holding a house in Northern Virginia, and you're a seller and you're like, hey, you know, maybe I'll sell. What's going to happen is the rates will go down, right? Right now, they're trying to make up for all that free money that they pumped in over COVID.
Mhm.
So once the rates, I think right now they're sixes. I think my last contract I did was in the sixes. Depends, obviously, credit, all that comes into play. If they go down, we will have another 2020. Supply and demand. There's what? 27 houses in 21701 that I checked this morning.
Mhm.
And
Well, a
let's
lot
drop
of
the
people
rates,
aren't
buyers
selling
come out
because they have low interest rate
because they
loans.
want to hold it. Over the last 10 years, all we've
Yeah.
had is
They want to
threes
keep
and
that loan.
fours, right?
Yeah.
However, life happens.
Yeah.
And if
Yeah.
you are sitting on an asset that you can walk away, and most are the one I got right now, they'll walk away with maybe 200, and they just bought it in 2020.
Mhm.
And not that much,
I
but
mean, my real estate all down in Florida and here has all gone up, but my
Mhm.
Bitcoin has gone up more.
Northern Virginia specifically is outside of DC.
Yeah.
I think it will be.
Yeah.
That's
I mean, my Bitcoin has significantly outperformed.
yeah, I think
Okay.
Bitcoin definitely
So
is the star.
it's not even a close call, and especially with the halving coming. So you do you, but
Yeah.
Bitcoin is the way. So Bitcoin is the only answer to you can't fix the stupid on so many levels. So here's the thing: people are going to at some point be forced to acknowledge Bitcoin.
Exactly.
They're not going to have any choice. Rachel, true or false? Sports Illustrated offered you 20 Bitcoins to be a centerfold, and you
40.
turned them
I don't
down
think
because
Sports Illustrated's coming for me.
she'd be at least 50 Bitcoin. Come on, you turned them down because all you
40
know
years
is
old. Yeah.
200 Bitcoins and 30 stainless steel Daytonas.
I would do it.
Okay, here we go. Leslie on the West Coast. She says, hi, everyone. And Rachel, what's going on with the real estate in California?
So I'm a little ignorant to the California markets or any markets outside of my territory. However, East Coast markets seem to mimic West Coast markets to a degree. We're doing fabulous here.
But a lot of people are moving out of California, though, too.
Yes, I have heard that because of politics.
They're moving to
and
Texas.
Big hefty tax now.
They have gone to Austin, and they've totally screwed up Austin.
I've got clients going to Texas.
Austin is now left wing.
Texas,
blue.
Florida, and then
yeah, they fortunately most of the liberals have gone to Austin instead of Florida. Most of the conservatives have gone to Florida. So thank goodness they've stayed out of Florida for the most part. But they have totally turned Austin totally liberal. Yeah. So if you like the liberal stuff, go to Austin. Okay. She needs answers. We just gave her answers.
I wouldn't invest in California.
Kyle and Leslie, miss seeing you guys on here. Yes, you guys should come in. Yeah, get your camera going and pop in. That's exactly why we need regular shows again. We miss you too. Let's see. And everyone for that matter. If Grand Seiko goes wrong, I don't want to be right. Okay, Lost Spring Bar. Leave it to Craig to invite a special guest and mansplain Bitcoin the entire time. Oh, sorry about that. Sorry about that.
I eat it up.
Rachel, I would like to buy Hawaii and move everyone off the island so I can fly you there.
Are we bringing my 5 kids? Can we include a nanny?
Handle the paperwork. Okay. Craig, would you care if Obama ends up buying your house? I don't care. I'm getting out. If I sell, I'm getting out of here.
Money's
that's the point. Okay, so what else before we wrap this puppy up? What else, Rachel?
So
you got more questions? No.
Yeah. So when I'm sharing with my, my pals, my other real estate investors or whatever, they're on their high horse. When I start to mention some of the Bitcoin, they immediately kind of zone out, I think, because they haven't done their research and don't know what I'm talking about. However, what are some things that I may be able to say to the common lad in passing, like, hey, you should watch for Bitcoin, or hey, this is something that's coming up, the halving's coming. What are different keywords that you've
I think
used?
the pitch on Bitcoin is that it actually solves a couple of major problems. And before I tell you the problems, let's catch up on this. Okay. Okay, so we're there. Okay. All right. So here's the thing. Here are the problems that it solves. When the internet came about, there are a lot of people that thought that the internet was going to be a big deal. And some people invested in the internet and internet companies, and some people did really well in the early days if they did that. But there are also people that said that, the internet needs a native money. It needs to be able to transact and to send money around. And so that needs to be part of the thing. So in some of the early designs of the internet, they actually thought about that, and they couldn't figure out a way to get around the double spending problem, where I have a token and then I send it to you and I send it to Durr, and I actually was only supposed to send it to you, but I actually spend it twice instead of once. That's a real problem for money, right? And it's because all of a sudden I got double the value for my money than what I should have gotten. Okay. And what if I triple spend it? All right. There you go. Okay. So what it took years, and there were folks that worked on this that were really smart people. It took years and years. And then some building blocks started to fall into place to overcome that double spend issue and to have a digital asset that was actually scarce, that was actually a controllable number of units. In other words, I can't double spend it willy-nilly. Okay. And so the big problem that Bitcoin solved was how to have a native money for the internet, that there was no central authority. Okay. In other words, it wasn't issued by a bank, a government, or whatever. Because if you are a central authority like PayPal, you can keep a spreadsheet and you can keep track of if Rachel sends Durr 1 unit, and keep track of the fact, and that she cannot send it to Joe Schmo. But that's centralized, right? That's got an entity controlling it. What they wanted for the internet was they wanted a native money for the internet that was not centrally controlled, because the internet, the whole point of it is it's decentralized. Okay. And so that was the problem. And that's what they overcame, was how to make a native money for the internet that we solved for the double spend problem. Okay. And they came up with something called proof of work, and they came up with the technology, and they came up with the difficulty adjustment and all these elements of Bitcoin that this guy or gal named Satoshi Nakamoto came up with. He put together the tools necessary, and that was sort of like an aha moment for the people that had been working on this for like 20 years prior. That, oh my gosh, we solved it, right? So now all of a sudden we have something that can be native to the internet, that can store value, that can't be hacked, can't be stolen, can't be manipulated, can't be shut down.
Governments don't
That
control
that because here's the thing: if I have a Bitcoin, okay, in my custody, okay, in other words, there's no third party involved, it's in my custody, and I want to give it to you, okay, so that you would have it in your custody. If anybody has any say in that matter, a government, a company, your husband, whoever, then that's no longer sovereign. That's no longer self-sovereign. That's no longer my money in my custody. Sort of like cash. If I have cash in my pocket and I want to give it to you, you take the cash. Nobody has any say in that.
No.
Except you and me. That's what they wanted for the internet.
Okay.
And that's the problem that Bitcoin solved. And before Bitcoin, that problem was not solved.
And now it is.
Okay.
However,
now it
now
is,
governments are trying
and now,
to...
but see, they have no say in the matter.
They won't.
They can't control it. Okay. They can't stop it. They can't, all they can do is they can tell people you can't use it. Right. They can threaten you. They can say, I'm going to put you in jail if you use it or whatever. But that's when the game theory of Bitcoin comes to play. And this is what was really so genius, is that they figured out a way for this thing to fly under the radar for a long time, and for it to spread around, and for it to be so decentralized that no one government can shut it down. China tried to shut it down.
I know.
Some years back. Okay.
I know.
And they failed. Okay. And so now what's happening is the game theory is playing out, that El Salvador embraced it, and it's tremendously benefited their GDP, and their economy is booming, their tourism is booming, and so on and so forth. So other jurisdictions are looking at, hey, we better become Bitcoin friendly, because we want these Bitcoiners coming and spending money here. Right. And so now the game theory is going to play out that these governments are going to want to be pro Bitcoin because it's going to help them.
That's
right?
true.
And then it turns into a Trojan horse,
And that's what we're seeing.
where it goes in and it gets into, the Black Rocks and all these people.
Yep.
They all want to make money on this. They're not doing this out of the goodness of their heart.
Nope.
They're going to make
They
a
saw
management
what it was
fee
doing.
on those ETFs they make a management fee, a percentage of the total assets under management that they have, AUM. They make a small percentage on all of that each year.
Yeah.
Okay, that's how they make their money. So it behooves them, A, to have as many people as possible buy into the ETF, and B, for the price of Bitcoin to go up as much as possible, because the more it goes up, the more they make in their percentage.
In their percentage.
Right?
Yeah.
So
Like real estate houses going up.
and this is the final thing I'll say about that is it's been around 15 years. It has been attacked relentlessly.
It has.
By governments, by companies, by individuals, by, they say everything, under the sun, it's used for human trafficking, it's used to avoid sanctions, it's used for this, used for all these things. But it keeps growing.
It keeps going. And
Okay.
now that
And so it's had 80% pull downs in price. Okay. But still, over the last 15 years, it's the best performing asset ever. And if you take any 5-year period, it's outperformed everything. Okay. You'd have to cherry pick 1 or 2 years to get a down year, right? It goes down 1 year and it goes up 3. This is how it's done for 15 years. Okay. So people can look at the charts and they can see that when you have a halving, which we're having in April, the next all-time high usually happens. I'm not going to say all-time high, the next record high, because the all-time high might be 100 years from now. The next record high usually happens a year later. Okay. So we got April, and then we're going to have some, sideways movement, and then some running up, then some running up. And a year later, we have a blow off top, maybe $250,000 or whatever. And then maybe it goes back down to 100,000. Okay. And then rinse and repeat. Okay. Until 2030, we're at $1 million. So here's the thing. People get Bitcoin at the price they deserve. I firmly believe that. They get it at the price they deserve. And I'm sick and tired of family members of mine and so on saying that I got lucky. Oh, you're so lucky that you bought Bitcoin. I was telling you all to buy it too.
You got me back in 2020.
I mean, I gave my nieces and nephews Bitcoin years ago. They've lost it all. They've lost it all, right? And so
they sold it all.
Most of them, they just lost it. They lost access to whatever. And so 2 of my sisters still have. No, I'm sorry. One of my sisters has most of it. The other sister sold half of hers. Okay, so that's fine. But here's the thing. That's it. It's a knowledge arbitrage. People either take the time to understand what's going on with Bitcoin and they get some exposure to it, or they don't. And if they don't, it's going to cost them, because everything else is going to go down in terms of the price of Bitcoin. So you should price everything you buy in terms of Bitcoin. You should look at, I'm buying a new car. That new car is 2 Bitcoin.
That's a good way to look at it.
And so what is 2 Bitcoin going to be worth 10 years from now? Right? So you better really want that car. Okay? Because if you buy a car for 2 Bitcoin, that's $80,000 today. Right? If Bitcoin is worth $1 million in 2030, you've got yourself a $2 million car. That's how much you spent on that car.
But that's how you have to look at it, though, I think.
So you should price things in Bitcoin. And these guys should price their watches in Bitcoin. Okay?
I'm clueless with watches and value.
And so that is a true measuring stick. We talked about a measuring stick that cannot be extended. It can't be changed. Bitcoin can't be changed. The issuance is what it is. It's math. It's ruled by rules. It's money that nobody can tamper with the rules.
And do you think that there's ever anything legal wise that could come into play that would tamper with that?
All that governments or other authorities can do is they can try to restrict your access to the Bitcoin. Okay. They can try to say that you can't spend it. They can try to say that you can't do this, you can't do that. You can't self-custody it. They might say you can hold a Bitcoin ETF, but you can't self-custody Bitcoin. During Prohibition, they tried to say you couldn't drink for a few years, right? I mean, but again, the game theory of it is such that if people want it, and if it's a worldwide thing, I think it's going to be very difficult for them to stop it.
Agreed. If you can't beat them, join them. And I think that's what we've seen here recently.
Nobody's going to get elected. No politicians are going to get elected if they say they're against Bitcoin. There's too many Bitcoiners.
You also have to think about the generations too. I mean, I've got I can imagine most people that are going to be around in the next 20, 30 years are going to have some form of digital assets. It's just going to be
okay.
non-existent.
So, Rachel, so every time I look now, I get lost in her gaze. Okay. All right. So you can't kill Bitcoin.
Aw.
Bitcoin will live on. Okay. So he says he thinks you blinked 3 times. Rachel,
taking it
cross
in.
your arms if you want me to send the private jet over to pick you up. It can be there in
Sounds
2 hours.
like
2 hours isn't quick enough, Dur. You got to get a faster jet. Come on. What are you doing? Craig, get the helipad ready.
Aw.
Who is Rachel Smith?
Hey, it's me. I'm just a realtor.
Yeah,
Investor.
we've got her link in the description. Craig, how much BTC is a bottle of water in rural Maryland? You know, that's the thing. If you were dying of thirst, a bottle of water could be worth a lot of Bitcoin.
A lot.
Yeah, it could
Especially
be.
for a night
The
out.
jet is on its way with champagne and filet mignon. Yeah, he talks a big game.
There
I
we
don't
go.
know.
Champagne girl.
Hi all, glad to make a stream. Tom in the house. Yeah, he's in Australia, so I think it's really early in the morning for him. Okay, all right. I think we're caught up. All right, what else? What other questions do you have? Okay, government can't shut it down even if they wanted to. They're starting to acquiesce because they're seeing that their voters want it. They're seeing that there is demand. What the BlackRock woman was saying, you know, hey, they want to
play. We want to play.
They want. She came right out and basically said they forced our hand. They wanted it, and they were
Because if
going.
they're not going to get it from BlackRock, they'll go somewhere else.
Yeah, because they were buying it on Coinbase, right? In Coinbase, they pay like 1% to buy it. Okay, they're paying a lot less in the ETF.
So now they'll be able to custody it with BlackRock.
It's like 0.2% or something. Products. Yeah, it's like instead of paying 1% at Coinbase, they're paying like 0.2%. You know, they're paying like 1/5 that amount, right? So that's the thing. If the people want it and enough people want it, which is looking like that's the case, government has got to go along with the program. Buy Bitcoin. Hi, Craig or Brad. Brad is from down under. So are we doing more regularly scheduled programming? Okay, from Australia. Hi. Okay. All right, we're caught up. Okay. All right, the O2. Okay, yes. I want to discuss this because this burns me up. This burns me up. All these people in these watch groups are all showing pictures of their steel watches and how great their steel watches are. They've been scammed, Rachel. They've been had. Okay.
Is it gold better than
the
steel?
People have told them in these forums, these influencers, right? And a lot of them are flippers. They flip watches and all. They're in the biz, right? So they've told them to buy these steel watches, right? Because here's the thing, they can make more money on the steel watches. Because if they buy a steel watch for, let's say, 10 grand and they can sell it to them for 20 grand, right? They can make a quick 10 grand. If they buy the gold watch that's going to be like 30 grand or something, first of all, none of them are going to be able to afford it. If they doubled the price, it'd be 60. They're not going to be able to do that. Yeah. That's a scam they can't pull. So what they did instead was they convinced everybody that steel was the way to go. That you need steel. That you need steel, right? But they pulled it off. They got these people. These people literally say they would rather have the steel watch than the gold watch. Okay. Now you're right there. Let me hand you this one. Examine this watch. Take your time. They also say that they're very fragile and that they don't hold up and that you can't wear them, you know, every day and all this stuff, right? How does that watch look to you, Rachel?
This is gorgeous. Doesn't look scratched or anything. Looks good.
I mean, and the scratches that are on it just look like a patina, right?
But that's all gold has.
Yeah, look at this. I wear this all the time and it gets a patina.
Because it's real.
But don't you think it looks better than if this was like if this ring was steel?
I'm not a steel fan in that element.
I mean,
you know what I mean? I would go gold.
But I mean, and you said that's kind of common sense, right?
Yeah, I don't.
But they've overridden people's common sense by hitting them with this every day, this argument. And one guy the other day tried to tell me that a steel and gold watch was better than gold. So it's half steel and half gold. I told him, I said, a steel and gold watch is just a compromise watch. It's like I couldn't get the all gold.
Half your gold.
So, yeah. I mean,
but hey, to each his own, right? There's something I'll buy that.
Yeah, but what burns me up is these influencers steering these people the wrong direction, because I
Yeah.
wore gold watches for 40 years, Rolexes for 40 years. I'm now wearing a Grand Seiko, but for 40 years I wore gold Rolexes, wore the heck out of them, and they held up great. It wasn't an issue.
And so now
It was not an issue. And so let me know in the chat what you guys think about
it's
that.
new.
What do you guys think in the chat? You prefer steel still?
New product.
What does Rachel think of the O2? Okay, we just talked about that. Let's
Okay.
catch up on this. Rachel,
I'm
is
surprised to
it
hear that. That's
ever
how dare I
reasonable to
love you.
spend over $20,000 on a wristwatch?
$20,000 to Joe might be nothing. Might be a lot of money to one person, and so
very good point. It all depends on your income.
on what your
That's the other thing. Rolexes were always, the wealthier people bought Rolexes. It wasn't just the average Joe buying the Rolex, and usually you didn't put it on a credit card and all that. You just paid for the watch back in the day, right? It wasn't a thing that people like. And first of all, they didn't have like 15 steel watches. Some of these guys in these watch groups have like a watch box with like 15 steel watches in there. I told the one guy, said, why don't you just sell 3 or 4 of those steel watches and get a yeah. I'm like, oh no, steel's the way to go.
Diversify your watch portfolio, right?
But when I see that kind of stuff, I'm just beside myself.
Yes, if it makes sense for the person buying it.
Arms crossed again. Don't worry, Rachel. The jet is almost halfway there. Get Craig to open up the runway at the compound. We'll turn the lights on. It's dark, so we got to turn the lights on.
Talk about the day dates a lot.
Craig, I still have not received the call for the gold GMT. Well, she had one there. You could have gotten that. I'm sure you could have gotten that one, a Lost Spring Bar. He looked at a gold GMT. Let's see which one. Is it this one? Yeah.
Ooh.
Yeah, that one. So that one, yeah, you could have gotten it. I think he was just whistling Dixie. I think he just didn't want it. Okay, Bluesy. Okay. Rachel needs a Patek Philippe. Yes, that would be nice for Rachel. Are you going to send her one? Did you really grab that platinum? No, I didn't. I don't know who you're talking about. I wouldn't buy the platinum one. I'd go with 18 karat yellow gold. Patek is trash, Grand Seiko. Yes, this is much more attractive. What do you think? I mean, just from a standpoint of you're not really a watch person, but what would you say about this particular watch, this 002?
Depends on my mood and my outfit and what I'm going for. But this is, I like the more minimum look, the more sleek look versus this is like if I'm doing some leather pants and
working out at the gym.
No, not that.
Yeah, this one.
Yeah,
like
that one. This one I
like if you're working out at the gym, you can work out with that. Right?
I don't wear any jewelry to the gym, but yes, I think that's a more masculine.
If you're sporting around, yeah, I get it.
Very pretty.
Okay, so we may need some shows every other day until we're all caught up. Well, Rachel was saying she's getting her system set up.
Oh, yeah.
She's getting a system set up. What about GS steel or titanium? Well, again, titanium, like that watch there, is great for a sport watch because it's very durable, it's lightweight, very comfortable. And so that is a good sport watch option, in my opinion. Okay, so Patel, that comment will be screenshotted, forwarded. Okay. What about gold Tudor? No. Pass on Tudor. Full pass on Tudor. Okay, we're caught up. Now, what they're going to do, I want to warn you because we're over time.
Oh, sorry.
I wasn't going to keep you more than an hour. No. I'm very respectful of your time.
Yeah.
But they will just keep commenting because they don't
want
it to end. So when are we going to do? What are you going to do about your show? When are you going to have a show?
I'm going to gear for February. Realistically,
okay. Are you going to do like a weekly
I would like to do a weekly show. I would like to get back into the streaming because it is easier.
Are you going to pick like a time slot and try to stick to it, or is that too difficult for you?
I could.
Because the thing about picking a time slot is it makes it easier to slowly build a live audience.
It would be better. Yes.
Because they know when they can expect the Rachel show.
Yeah, man. The Real with Rachel, where we talk real estate.
Yeah. And you could even do it at like 8 p.m. or something. Like, when is your slowest day and your slowest time of that day?
It doesn't exist. So my day at 5 a.m. Usually when I'm getting into the office you know, and getting acclimated and all that fun stuff. I usually will do all my filming because I do lots of little shows and social media stuff. I'll do that all in one day and just bang it all out. So probably it would fall onto a day like that. Probably a Tuesday or Wednesday.
Okay.
And then
And
morning time is usually my schmeal. But I mean, he wants to hear about real estate all the time. So, you know, what time? So I would record it usually and then do a weekly.
okay.
Versus me scheduling it on. But yeah, I'm definitely starting back up again, starting to talk more about real estate, more tips and tricks to sellers and buyers, what's happening here outside the DC metro area, which kind of is an inclination as to all the other trends that are happening in real estate land. I have guests on like economists, lenders, inspectors, sewage people, got the whole nine. So we'll be branching out in that arena. So it'll be fun.
And are you going to have a setup similar to this, or what is your setup?
So I have a space now. Yeah, equipment wise, yes, I could use something like this. Well, what do you mean?
And do you still have mics and stuff?
I have everything still.
Okay.
Yeah, it's all packaged up, ready to be unpackaged.
Okay.
So wish me luck with that. So we'll get set up. I got to get a good background. And yeah.
All right.
Excited. Yeah, and then we can talk more about Bitcoin. Maybe I'll have you on, Craig, and how Bitcoin and real estate can merge.
I just listened to a podcast today that basically was saying Bitcoin's going to eat everything. That everything is going to be, every business out there, if they don't embrace Bitcoin, they're going to be out of business. I'm excited. It's just like if you didn't embrace the internet, then it was a problem. Right?
Same thing that I've seen in my industry, you know, in this area. People know me. Because I embrace the social media and the videos. And I remember you were like, hey. And then getting more into that.
Yeah. All right. We're going to wrap this puppy.
Thank you, guys.
Let's show your
my website.
Is this it? Yeah, that's it.
SmithPartners.com.
Show that puppy right there.
So
Smith Partners. And the URL there says RachelSmithRealtor.com. So either one works. Either URL. Just search Rachel Smith Realtor. It'll come up. All that good stuff. And Hoffman's is closed, unfortunately. Somebody just mentioned Hoffman's.
The ice cream?
Yeah, they sell the subs and all right here. The place that had been there forever.
I think they opened in Frederick again.
No, they sold it, auctioned all their stuff. Hoffman subs, the folks that used to run it.
There's something in Frederick.
And they had been there forever, but yeah, they're gone. They're gone. All right, thanks everybody for watching. We are out of here.